Imagine you could hand the world's greatest investor a single $100 bill and ask him, "Make me rich." It sounds like a fantasy, right? But if you strip away the billions, the fame, and the sprawling empire of Berkshire Hathaway, you're left with a set of core principles that work just as well on $100 as they do on $100 billion. Before we jump in, if you want more simple, powerful money strategies like this, make sure to like this video and subscribe. The craziest part isn't what Warren Buffett would do, it's how shockingly simple it is and why almost nobody actually follows through. This isn't some get-rich-quick scheme. It's a get-rich-for-sure blueprint, and it all starts with a single Ben Franklin. Before you even think about money, Buffett's first move has nothing to do with stocks or markets. His most important piece of advice is to invest in yourself first. He famously said, "By far the best investment you can make is in yourself. Nobody can tax it, and nobody can take it away from you." He argues that sharpening your skills, especially in communication, can boost your lifetime value by 50% or more. Think about it, your earning power is the real engine of your wealth. $100 spent on a book, an online course, or a public speaking class could pay you back tens of thousands of dollars over a lifetime in better jobs and new opportunities. Buffett himself famously spent $100 on a Dale Carnegie course to get over his fear of public speaking, an investment he says changed his life. The return on that one investment is impossible to calculate, but it was monumental. So before you open a brokerage account, that first $100, or at least the mindset behind it, should go toward making you a more valuable asset, the counterintuitive power of a small start. Most people assume you need a lot of money to make money, but Buffett sees it differently. He's on the record saying that if he were managing a small amount, say just $1 million, he could guarantee a 50% annual return. How? Because being small gives you a massive advantage: flexibility. While Berkshire Hathaway has to hunt for multi-billion-dollar deals to move the needle, a small investor can find amazing opportunities in the forgotten corners of the market. You can get into tiny companies that have explosive room to grow, but here's the twist: while Buffett could do that, it's not what he'd tell you to do. Why not? Because that path requires an obsessive, all-consuming passion for sniffing out those rare, undervalued gems. It means dedicating your entire life to research. For the 99.9% of us who have, jobs and families, trying to be a stock-picking genius is what he calls a loser's game. So, what's the real plan for that first $100? It's almost insultingly simple, but it's the exact advice he's given for decades. It's the same strategy he's instructed to be used for his own wife's inheritance. Put 90% of it into a very low-cost S&P 500 index fund. The $100 snowball your step-by-step blueprint. This isn't just a vague idea, it's a precise, actionable plan. Here's exactly how you can turn that $100 into a small fortune. First, open a low-cost brokerage account. These days, platforms from places like Vanguard or Fidelity make this incredibly easy, and most have no commissions or minimums to get started. Second, take your entire $100 and put it into one thing, a low-cost S&P 500 index fund or ETF, like Vanguard's VOO. An S&P 500 fund is just a basket that holds a tiny piece of the 500 largest, most profitable companies in America. You're not betting on one company to succeed, you're placing a long-term bet on the American economy as a whole. As Buffett likes to say, he has yet to see a time when it made sense to make a long-term bet against America. Third, and this is the most important part, put it on autopilot. That first $100 is just the first push of the snowball down the hill. The real magic happens when you consistently add more. Set up an automatic transfer of $25, $50, or whatever you can spare every single month. This is called dollar cost averaging. You invest the same amount on a regular schedule, no matter what the market is doing. It takes emotion out of the game and naturally makes you buy more shares when prices are low and fewer when they're high. Fourth, do nothing. For decades. Seriously, this is the hardest part. You have to fight the urge to sell when the market panics, and every headline is screaming, crash. You also have to resist chasing the hot new stock everyone is talking about. Buffett's #1 rule is never lose money, and the fastest way for most of us to lose money is by trying to get clever. Your biggest advantage isn't being smarter than everyone else, it's having more discipline. Don't believe it. Buffett won a $1 million bet that a simple S&P 500 index fund would crush a hand-picked group of sophisticated hedge funds over 10 years. The index fund returned 125.8% for the period. The pros, with all their genius and sky-high fees, returned a pathetic 36.3%. Their constant trading and tinkering was their downfall. Your patience is your superpower. Quick pause for a second. If this is making you rethink how money actually works, then you're exactly the kind of person this channel is for. Most people chase fast money and stay broke. But if you're here to build real wealth the smart way, like Warren Buffett teaches, hit subscribe now. Because the next part is where everything changes. This is where your money starts working harder than you ever could. The unstoppable force of compounding. Buffett calls compounding the snowball. You just need wet snow and a really long hill. That $100 is your snowball. The S&P 500 is the wet snow, and time is the long, long hill. Let's look at what history says. The S&P 500 has historically returned an average of around 10% per year, with dividends reinvested. So what happens to your one-time $100 investment? After 10 years, your $100 grows to about $259. Doesn't sound like much, right? This is the point where most people get bored and quit. The snowball is still just a snowball, but let's keep it rolling. After 20 years, it becomes $673. After 30 years, it's now $1,745. After 40 years, it grows to $4,528. After 50 years, your single $100 bill transforms into $11,739. And after 60 years, it becomes a staggering $30,448. That's from a single $100 investment. Now imagine following the blueprint and adding just $50 every month. The growth isn't a straight line, it's an exponential curve. In the early years, your returns feel tiny, but in the later decades, the money your money earned starts doing the heavy lifting. This is exactly how Buffett built over 98% of his net worth after his 50th birthday. It's not about timing the market, it's about time in the market, the mindset that protects your fortune. Building wealth isn't just about math, it's about mastering your own psychology. There are two principles you need to live by to protect that growing snowball. First, live below your means so you can invest the difference. Buffett's advice is brilliant. Do not save what is left after spending. Instead, spend what is left after saving. This means making investing a non-negotiable first payment you make each month. Just like rent. The silent killer of wealth is lifestyle inflation. As soon as you make more money, you're tempted to spend more on a nicer car or a bigger house. By keeping your expenses in check, you can shovel more cash into your investment snowball and dramatically speed up its growth. Buffett himself still lives in the same house he bought back in 1958. Second, you have to learn to be fearful when others are greedy and greedy when others are fearful. This might be his most famous quote, and it's the core of smart investing. For an index fund investor, this means you keep making your automated monthly investments especially when, the market is crashing. Those moments of panic are when your dollars buy the most shares, setting you up for incredible gains when the market eventually recovers. Market downturns aren't a risk to be avoided, they're a regular opportunity for the disciplined investor to seize. The principles are dead simple, but putting them into practice takes real discipline. If this breakdown gave you a clear path forward, let us know in the comments what part of Buffett's advice surprised you the most. Was it the focus on index funds, the insane power of patience, or that the first investment should be in yourself? And if you want to keep mastering the strategies of the world's greatest investors, make sure you subscribe for more deep dives into timeless financial wisdom. So what would Warren Buffett do with $100 today? He wouldn't buy a lottery ticket. He wouldn't chase some crypto fad. He'd use it to plant a tree that he knew would one day provide shade for others. He'd start by investing in his own skills to boost his earning power. Then he'd take that $100, put it in a low-cost S&P 500 index fund, and kick off the slow, steady, and unstoppable process of compounding. He'd add to it every month, ignore the noise, and let time do all the hard work. The secret to building a fortune isn't really a secret at all. It's a simple blueprint that rewards discipline over brilliance and patience over daring. The journey from $100 to a fortune doesn't start with a stroke of genius. It starts with one decision, a little patience, and a very, very long hill.